Happy new month to you all, and welcome to Tuesday's edition of the Market Review. It's the new month of September, and we bring you key developments in the financial and capital markets related to the economy. Today, we take a look at activities in the bonds and fixed income markets. And let's give you a lineup of what we'll be discussing today. Look at the Anchoria assessment of previous week's performance in the bonds and fixed income space. Afrinvest analysis on previous week fixed income money markets. And Dangote Series 17 and 18 commercial papers, what's happening there. And of course, CardinalStone's debut commercial paper issuance subscription hit 148%. So we begin with Anchoria's assessment of the previous week's performance in the bonds and fixed income space. Starting with the money market, the average money market rate rose significantly by 12.09% to settle at 14.40% up from 2.32% in the previous week. This may be attributed to the cash reserve ratio debits across banks by the Central Bank of Nigeria. There were also OMO auctions which pressured liquidity in the system. These outflows outweighed the inflow from OMO maturities worth 283.42 billion naira and the federal government of Nigeria coupons of 49.9 billion naira. For the interbank rates, the open buyback closed at 13.9% compared to 2% in the previous week, while the overnight rate closed at 14.9% compared to 2.63% the previous week. Anchoria expects buoyancy in the system liquidity as inflows from OMO maturities are expected to hit the system in this week. In the foreign exchange markets, the FX market, a circular last week directed all authorized dealers and bureau de change operators from the Central Bank of Nigeria that there will be a resumption of forex sales to the BDC operators in the country. The circular further stated that the forex sales to BDCs will commence August 31st, which is already yesterday, at 386 naira to $1. With the commencement of international travels, Nigerians who seek to travel only need to present their passport along with visa and tickets to banks for forex sales to them at the official rate. This is expected to bring some stability and drop in forex price at the parallel market, as close to 3,000 BDCs will have access to $10,000 each twice a week, equaling a total of almost $60 million weekly. Also, the Central Bank of Nigeria issued a circular during the last week targeting buying agents or companies and third parties from accessing its SMIS Forex window through the Form M purchase, Forex purchase. This means that the CBN is in effect eliminating overpricing and mispricing of goods and services imported into the country. Anchoria expects the pressure on Naira to drop in the short term as the Central Bank of Nigeria continues to express its commitments by carrying out measures to stabilize and unify the exchange rates. That's for this week. Let's go to the bonds market. In the bond space, the secondary sovereign bond market closed bullish last week as the average yield fell by 2 basis points to close at 7.97% compared to 7.99% in the previous week. The highest yield decline was witnessed in March 2036 bond, which declined by 58 basis points to close at 9.05% compared to 9.63% the previous week, while the highest yield increase was seen in March 2027 bond, which rose by 32 basis points to close at 8.11%. The bullish sentiment witnessed in the market may be attributable to investors reinvesting their OMO maturities and bond coupon payments, which flowed into the system during the week. Investors seem to flock towards the short-term bonds to reap the upcoming coupon payments. The sovereign euro bond market closed on a bullish note as the average yield fell by 11 basis points to close at 6.78% compared to 6.89% the previous week. In the same vein, the corporate euro bond market closed bullish as the average yield fell by 9 basis points to close at 7.03 compared to 7.12% witnessed the previous week. Anchoria expects increased activities in the bond market as investors hunt for investment outlets due to excess liquidity this week. At the Treasury bills market space, it closed bearish last week as the average yields rose by 82 basis points to close at 2.02% compared to 1.05% the previous week. Conversely, OMO bills fell by 25 basis points to close at 3.12% compared to 3.36% the previous week. At the auction held on Wednesday, the Central Bank of Nigeria rolled over maturing bills worth 197.60 billion naira with allotments of 20.37 billion naira for the 91-day period, 31.17 billion naira for the 192-day, and 145.48 billion naira for the 364-day period. The stop rate for the 182 and 364 days inched higher to close at 1.80% and 3.34% respectively, while the 91-day inched lower to close at 1.14% compared to 1.20% from the previous action. The auction was oversubscribed across all tenors, thanks to the healthy system liquidity which sustained demand across board. Anchoria expects increased demand in the treasury bills market as investors take position in the market this week. And now let's look at the Afrinvest analysis on the money markets. Last week, performance in the treasury bills secondary market was mixed, albeit more bearish despite buoyant system liquidity, about 509 billion naira long on Thursday last week. Although on-field bids like the 24.3 billion naira from the primary market auction filtered into the secondary market last week Friday, major sell-offs were witnessed at the medium end of the curve. The 28 January 2021 tenure showed plus 81 basis points, while the 14th of January 2021 tenure showed plus 64 basis points. Consequently, average yield across all tenures shed 47 basis points to close at 2% on Friday last week. At the primary market auction, the Apex Bank offered a total of 197.6 billion worth of national treasury bills across the three tenors, and this was 1.1 times oversubscribed as subscription totaled 221.9 billion naira. Interestingly, the 91 and 182-day bills were also subscribed, while the 364-day instrument recorded a bid-to-cover ratio of 0.9 times. Subsequently, the Central Bank of Nigeria allotted total offered amount of 197.6 billion naira with stop rates on the 182 and 364-day bills advancing by 41 basis points and 14 basis points respectively. The Central Bank of Nigeria also conducted an open market auction last week Thursday, where a total of 100 billion naira was offered across the 89-day period of 10 billion naira, 107-day period of 10 billion naira, and 262-day period of 80 billion naira instruments. The bid-to-cover ratios across the short, medium, and long-term instruments were 2 times, 1 times, and 0.9 times respectively. Consequently, allotments were issued at marginal rates of 4.9% for 89-day, 7.7% for 180-day, and 8.9% for 262-day. On the back of expected OMO maturities worth 221.5 billion naira last week Thursday, they anticipated an uptick in activities at the secondary market, which should pressure yields. Investors are advised, according to Afrinvest, to take advantage of attractive instruments across the yield curve while looking out for corporate offerings such as commercial paper issuances. In terms of the bonds updates, mixed sentiment witnessed as average yields shed 2 basis points week on week, that's for the previous week. In a similar vein, performance in the bonds market was mixed, although slightly bullish. The week started off on a bearish note, following sell-offs amid the absence of significant bids. However, buying interest from the local market players, particularly the pension fund administrators, buoyed demand last week Friday. The March 2036 minus 58 basis points, and the January 2022 had minus 49 basis points. Instruments had the most buying interest, while on the flip side, investors booked profits on the March 2027, which was plus 32 basis points, and the July 2034, which was plus 28 basis points. Consequently, average yield declined by 2 basis points to close at 8% last week Friday. On the back of the anticipated improvement in system liquidity and the absence of a primary market auction this week, Afrinvest is not ruling out the possibility of a bullish session as investors position across the curve. Its recommendation is for investors to cherry-pick attractive instruments with cheaper prices while looking out for possible corporate offerings. That's the advice to investors this period. Cherry-pick and watch out and be very cautious. And Dangote Cement is also coming up stronger in its commercial paper issuances as it informs the investing public of the Series 17 and 18 commercial paper issuance. This is under the Dangote Cement PLC, 150 billion naira CP issuance program, which is now open and scheduled to close on Thursday, 3rd September 2020. Dangote Cement is the largest cement manufacturer in sub-Saharan Africa with an installed capacity of 45.6 million metric tons per annum across its operations in 10 African countries. Dangote Cement is assigned an AA+ long-term rating by the GCR and an AA2NG long-term rating by Moody's. It is one of the few corporates in Nigeria with a top-notch rating of AA+. So Dangote bullish and coming on board to leverage more of its commercial papers 17 and 18 under its 150 billion naira commercial paper issuance program. Still on the commercial paper space, the CardinalStone Partners Limited, one of Nigeria's leading multi-asset investment management firms, successfully completed its debut commercial paper issuance with a subscription of 448%. That is massive. This impressive subscription level demonstrated one further investors' confidence in the company and the ability of its management team to deliver value. The company has set out to raise 5 billion naira in the first tranche under its 10 billion naira commercial paper program recently registered with the FMDQ Security Exchange Limited. However, subscriptions totaling 7.1 billion naira were received from individual and institutional investors, including asset managers, pension fund administrators, amongst others. The Series 1 270-day commercial paper was issued at an effective yield of 7%. The company's Group Managing Director and CEO, Mr. Michael Nzewi, was pleased with the overall outcome of the commercial paper issuance. He indicated that the funds from the commercial paper issuance will enable the company to diversify its financing mix and fund its working capital requirements. This issuance is expected to consolidate CardinalStone's position as a credible borrower in the market, in the Nigerian capital market, while at the same time setting a precedence for commercial paper issuance by a non-bank affiliated financial services business, Mr. Nzewi said. FBN Quest Merchant Bank Limited acted as lead arranger and dealer, while FCMB Capital Markets Limited and CardinalStone Partners Limited were joint arrangers on the debut commercial paper transaction. CardinalStone was founded in 2008 with a vision to build a world-class investment banking firm of African origin. Over the years, the company has continued to offer an assortment of financial services to a diverse institutional and retail clientele base. In addition to investment banking, CardinalStone also offers securities trading, asset management, registrar services, and consumer finance via its subsidiaries, namely CardinalStone Securities Limited, CardinalStone Asset Management Limited, CardinalStone Registrars, and CS Advanced Finance Company, respectively. It has been an interesting period for the bonds and fixed income market since the turn of 2020. A lot was expected. There was a lot of optimism, but of course the pandemic also disrupted a lot of activities. But one thing we can say is that we've seen an increasing appetite from the sovereign, the corporate companies who are coming on board to issue commercial papers. Just saw that of the Dangote Group and Dangote Cement PLC and even CardinalStone. Several companies have been engaging in commercial papers to see how they can deepen their financial mix. And that is an interesting story which we've been watching and monitoring. And we hope to see much of that activity in the month of September. We hope to see other companies explore how they can assess and deepen their financial mix by exploring the commercial paper space. Also, the corporates have also been active also in the debt markets. Prior to now, we know that it has been dominated by the government, by particularly the federal government. But now we're seeing that happen, and it is interesting how, like Nova, the Nova Merchant Bank had also assessed the market. The likes of Lapo Microfinance Bank had assessed the market. We've seen all those activities showing how the debt market is also attracting the corporates. So we need to see more of that activity, and hopefully that will happen in the month of September. The dominance by government should now begin to give way to the activity of the corporates, and particularly in monitoring the Eurobond space and in the appetite of investors. Also, the Central Bank of Nigeria this month will hold its Monetary Policy Committee meeting around the period of September 21st, and very critical to see the decisions that will be taken, particularly around the cash reserve ratio and the liquidity ratio. Those will also go further to speak to the activities in the money market, and also how we would be looking at the treasury bills space. Don't forget that these are spaces that used to be very, very lucrative in terms of yields, but now the treasury bills are not posting those huge yields. So it's once again another step to see the Monetary Policy Committee and their thoughts around the impact so far of their responses and how it's going to impact the market in this year. So September will also be an opportunity to monitor how the Central Bank of Nigeria's MPC meeting decisions will impact the money market and particularly treasury bills activities. Also of huge interest, the resumption of the sale of FX to the BDCs. We've seen how the Forex market has fared, the huge disparity from the official to the parallel market has been wide, and so the decision to sell the FX now to PDCs, we're monitoring the impact of that and how that begins to bring down the disparity. Don't forget that international financial institutions and agencies like the IMF and the World Bank have restated the need for the Central Bank of Nigeria to unify the exchange rates. The Central Bank of Nigeria is thinking in that direction and taking steps towards that. So how this will impact the market will be very key as we monitor that this month, particularly the import and export FX window for this period. Also, the FMD Securities Exchange, a major player in this space, will be watching its development program, particularly around the green financing, the climate bonds, as we see an increasing appetite for stakeholders to work around sustainable financing. Don't forget now that Nigeria has a great opportunity to achieve sustainable development. There's a SDG target, Sustainable Development Goals, developed by the United Nations. 2030 is a target, and there's a call by all stakeholders for synergy, for collaboration to achieve a robust, sustainable financing measure that can achieve a sustainable environment and society for the country. So we're looking at activities around areas like increasing impact investing, green financing, and sustainable development. So how this market performs will be of key interest as we look through the months, and we also know that Lagos State is a very critical space in that regard. It has the Financial Center for Sustainability, which is domiciled in the FMDQ Securities Exchange, FMDQ Group. And so we want to see how that center will continue to drive activities to boost Nigeria's position as a major nation that is sustainable in its financing approach. So there's so much that can be achieved in this regard, and that space particularly is very important. The development of the green bond markets and its activities across all the key exchanges, and how companies are responding also to promoting a sustainable environment. That will be very critical also. Of course, in the month, we'll also be watching the developments across major financial institutions and the US Fed, the decisions around the FOMC, the Federal Open Market Committee, FOMC, chaired by the chairman of the US Federal Reserve, Mr. Jerome Powell. Decisions around the Fed and how it's going to impact the Nigerian markets and the frontier markets, which Nigeria is, and the emerging markets will be very key. Also, we're looking at developments in the European Central Bank, which has as its president and former MD of the International Monetary Fund, Christine Lagarde. Decisions there also would have its impact, as Europe is also a major trading partner and ally with Nigeria. So those decisions will also have its effect on watching how it impacts our market. So from the international scene also, there's a lot that we're watching out for. And don't forget that in this period of the COVID-19 pandemic, we're seeing the resumption of international flights. That will also be seeing how people can access the FX markets to carry out their activities. So a lot of activities are going to be resuming in September. Schools are also resuming across states, and also we're seeing some activities begin to open up. So how prepared the market to support those activities will be of immense importance at this time. We'll also be looking at the Debt Management Office in terms of its monitoring and evaluation of projects, particularly in the non-interest space, the Sukuk bonds rolled out for various projects across the country, and also some updates on Nigeria's current debt profile and how Nigeria is faring in that regard, and also national bonds, FGN saving bonds and new issuances. We're also watching if the DMO would also do same in this month. So the month of September marks the beginning to the last quarter of the year. So it's a lot to watch out for in the bonds and fixed income space. So we'll be here to keep you posted, to give you all those developments every Tuesday in the week. Just watch out for those updates, interviews, and developments around the space. You can also visit our website. You can also send your views on this as we wrap up. So it wants to be an interesting month, and if you're out there, the major story now is that the Central Bank of Nigeria has resumed the sale of FX to the BDCs. So expect to see some level of stability in the foreign exchange market, because you know the foreign portfolio investors have been watching that. They need that clarity and stability to bring in investments. So more statements, more clarity from the Central Bank of Nigeria on the FX market will be very key in the month of September. And that'll be all for today's edition of the Market Review. You can visit our website, www.proshare.com, to watch videos with the news stories and reports. It's the month of September, so you expect a lot of activities and developments in the bonds and fixed income space. So every 10 a.m. on Tuesday, watch out for that on this show. Till we come your way again, let's make it the date tomorrow by 10 a.m. Thank you for watching. Have a nice day and stay safe.